What we clearly heard from Donald Trump is never sell your Bitcoin. Big question was, does the United States sell Bitcoin? Does the United States buy Bitcoin? If you recall, the German government sold a lot of Bitcoin at $55,000 a Bitcoin. It turns out to be a more than $1 billion mistake in a couple of weeks. Big mistake.
In a recent interview with Natalie Brunell, Michael Saylor explored Bitcoin's ongoing price surge, describing its volatility as a double-edged sword now revealing its true value. Saylor highlighted that Bitcoin's allure lies in long-term capital preservation, noting that over $450 trillion is invested in assets designed to safeguard wealth for future generations. He contrasted Bitcoin's role as a superior store of value against traditional currencies, emphasizing its unique ability to protect and grow wealth over time, despite the everyday utility of fiat money. As Bitcoin's price continues to climb, it has become a focal point in digital asset discussions, drawing the attention of institutional investors and government bodies worldwide. A pivotal question emerging from this surge is whether the United States will choose to buy or sell Bitcoin. This dilemma recalls historical decisions like Germany's move to sell a significant portion of its Bitcoin holdings when prices hovered around $55,000, a decision that backfired as prices skyrocketed, leading to losses exceeding $1 billion within weeks. Such cases raise critical questions about whether governments and institutions truly understand Bitcoin's potential as a transformative asset class. As the financial revolution unfolds, Bitcoin's role is rapidly evolving. The current price surge is more than a fleeting trend, it signals Bitcoin's growing capacity to redefine wealth storage and transfer on a global scale. This shift underscores the need for institutions and governments to reassess their strategies and recognize Bitcoin's potential to reshape the future of finance.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
What we clearly heard from Donald Trump is never sell your Bitcoin.
Rule that every Bitcoiner knows by heart: never sell your Bitcoin, right?
Big question was, does the United States sell Bitcoin? Does the United States buy Bitcoin? If you recall, the German government sold a lot of Bitcoin at $55,000 a Bitcoin. It turns out to be a more than $1 billion mistake in a couple of weeks. Big mistake. And people used to speculate, well, you know, is the government going to dump the Bitcoin? Are they not? And now what you see is Trump is pro-Bitcoin. And with the red sweep, that means the Republicans run the Senate, control the Senate, and they control the House, which means the pro-Bitcoin senators, like Senator Lummis, have now moved from being in the minority to being in the majority. In the minority, you watch the laws being written. In the majority, you write the laws, you pass the laws. Before November 5th, there was actually broad consensus in the House and the Senate to repeal SAB 121. And they did. And the president vetoed it. So what I would expect is that SAB 121 will be either withdrawn by the SEC or it will be repealed, and the president will support the repeal. That opens the way for banks to custody Bitcoin. That opens the way for the entire banking system to embrace Bitcoin. And I think for Bitcoin to grow by a factor of 100x from here, we need for the banking system of the world to support Bitcoin. So if I think about the consequences for Bitcoin, I think what this means is it's an acceleration of pro-Bitcoin regulations. I think that we'll see in-kind creation and redemption of Bitcoin ETFs. I think we'll see the repeal of SAB 121. I think we'll see support for Bitcoin within the banking system from the banking regulators, from Treasury, from OCC, from SEC. I think you'll see more supportive legislation from Congress. I think it will be approved by the White House. I think that this is a signal to accelerate institutional adoption. I think that the previous administration had been hostile to Bitcoin mining, hostile to Bitcoin banking, hostile to the Bitcoin ETFs. the failure of Silicon Valley Bank, followed by the shutdown, I mean, effectively the forcible liquidation of Silvergate and Signature, even though those were solvent banks. I mean, they were perfectly healthy banks that were actually forced into receivership by a hostile administration. I think that had caused the banking establishment, reasonably enough, to be skittish and to be conservative and a little bit slow to adopt Bitcoin because they could see there was resistance in the administration. I think that now, with a new administration, with President Trump coming to the Bitcoin conference in Nashville and saying, I will end the war on crypto, I will end the war on Bitcoin, I will support Bitcoin, we will not sell our Bitcoin, we're going to make Bitcoin in America. America is going to be the capital of Bitcoin, right? The fact that he said that, I think that sets the tone at the top. That means I think, number one, it seems inconceivable to me that a head of the Treasury or the CFTC or the SEC will be appointed that is anti-Bitcoin or anti-crypto, right? That seems quite obvious. We know that Trump is all in on crypto, all in on Bitcoin. So I think that we'll have favorable, supportive cabinet members.
With the Republican Party now controlling both the Senate and House in the U.S., pro-Bitcoin senators have gained considerable influence, paving the way for potential shifts in legislation. Michael Saylor anticipates the repeal or withdrawal of SAB 121, a move that would allow banks to hold Bitcoin and integrate it into the traditional banking system. He also foresees an acceleration of Bitcoin-friendly regulations, including the approval of Bitcoin ETFs and the passage of favorable legislation. Under a Trump administration, Saylor predicts increased institutional adoption of Bitcoin, signaling a broader shift toward positive cryptocurrency policies. Saylor emphasizes that most wealth is not held in pure currency but in assets with utility, such as real estate, art, and businesses. He argues that in the absence of perfected digital capital, traditional assets are often overvalued and must be monetized for greater efficiency. Bitcoin, as a transformative digital asset, has the potential to address these inefficiencies by offering a superior store of value and financial utility. As the regulatory environment evolves, Saylor remains optimistic about Bitcoin's future within institutional frameworks. The integration of Bitcoin into the banking system and supportive legislation could mark a significant milestone in its journey toward mainstream adoption.
I think if you look at the world today, there's $900 trillion or more of wealth in the world. A lot of that wealth is invested in real estate. A lot of that wealth is invested in equity. A lot of that wealth is invested in gold, in art. A lot of that wealth is in currencies. A lot of that wealth is in bonds, corporate bonds, governmental bonds, and then a lot of that wealth is in various other forms of derivatives. The compelling use case, the most important use case in the world, the most valuable thing in the world is just long-term capital, long-term store of value. That's worth half of all that. $450 trillion worth of long-term capital, right? When people struggle with what's the use case of Bitcoin or what's the use case of anything, well, the irony is they're staring right at it. It's like to be rich and stay rich forever. It's what everybody wants. It's what every kid wants. Every 3-year-old wants this. There's no one that ever lived in the history of the world that didn't want more money, more power, right? They wanted wealth and prosperity. So that's worth $450 trillion. Capital. That is the compelling thing. Now, what is currency? Well, currency is the medium of exchange. It's what I swap in order to get my gasoline, or in order to buy a donut, in order to pay the rent. And it's the high frequency liquid money, liquid stable high frequency money. It allows 400 million companies to have a price list with 100 items on it. So you've got billions and billions and billions of prices in a certain currency, and we need to swap that back and forth at high frequency. Well, how valuable is that? I don't know, 10 trillion? 1, 2, 3, 4, 5, 10 trillion? Not 450 trillion. A very simple use case, or a simple acid test is, Jeff Bezos, worth $200 billion. How much of the $200 billion is invested in US dollars? Pure dollars in a savings account or a checking account right now? What, 1%? You think he's got $2 billion cash? No. He probably doesn't, Bernard Arnault, worth $180 billion. How many dollars or euros do you think Bernard Arnault has right now in there? Right? Not even 1%. So if the 450 trillion is the wealth, right? That is assets held for capital preservation. The other 400 trillion or 450 trillion assets held for utility. I have this house, so we can have this interview. I like the backyard. I like the pool. I could park a yacht in the backyard. I like it. Utility.
Can't live in a Bitcoin.
The yacht is a utility. The jet is a utility. The chair is a utility. The art is utility value. It's okay. You own the sports team because you want to go sit courtside and root for the team, right? There are a lot of you own Apple because you want to root for Apple and you want dividends maybe. So you own a bakery because you like the idea of creating cool things with the bakery. You own the restaurant because you love the restaurant business. You own a resort in Hawaii because you want to invite your friends to the resort in Hawaii. There's a lot of things in the world that are held for their utility value. You should own a bond because you want to clip the coupons. You want fixed income in a secure currency. In a world without digital capital, without perfected capital, then we have to monetize the real estate, monetize the bond, monetize the stock, monetize the art, monetize, everything under the sun. What does that mean? It means that you pay twice as much as it's worth.
Bitcoin is edging closer to the monumental $100,000 mark, with its price recently surging to nearly $99,800 on November 22 before briefly dipping below $96,000. The cryptocurrency quickly rebounded, showcasing strong bullish momentum and pushing closer to clearing the final resistance levels near $100,000. Market analysts, including Skew, predict a violent breakout once Bitcoin surpasses these liquidity barriers, as remaining sell orders are absorbed. Positive market signals, such as higher limit bids, suggest additional upside potential as Bitcoin approaches this critical threshold. Order book analysis on Binance reveals significant sell orders clustered between $99,000 and $100,000, heightening anticipation of an explosive rally once these barriers are cleared. However, some traders are betting against the trend, shorting Bitcoin at these levels despite warnings of potential losses. Recent data from CoinGlass reported nearly $15 million in short liquidations, adding to the momentum for a potential breakthrough. On-chain analytics from CryptoQuant, however, indicate a drop in spot trading volume, with Binance activity declining even as Bitcoin continues its climb. As Bitcoin teeters on the edge of six figures, the market remains on high alert. Bullish traders eye a parabolic rise, while short sellers face mounting risks of being squeezed. The critical question remains: will Bitcoin cement its role as a cornerstone of the future financial system, or will regulatory pressures and skepticism limit its ascent? Share your perspectives in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.